Welcome back to Friday Briefing. Thank you very much for staying with us. Let's take a look at some business news now. And government has denied allegations by a section of clearing agents at Busia and Malaba borders that the new one-stop border point system was targeting to edge them out of business in favor of their Ugandan counterparts. According to Kenya Revenue Authority Customs and Border Control Manager John Gathatwa, the automation of clearing process has been a thorny issue among most clearing agents. Gathatwa dismissed claims of a standoff between KRA and clearing agents over licensing, noting that the agents are currently using the extension of the 2016 licenses as they are given room to comply with the current system.
Virtually all processes, not only Kenya, also for Uganda, for Rwanda, for Burundi, for Tanzania, everyone is automating their processes. Unfortunately, if you are left behind, wherever you are, be you a clearing agent, be you an importer, if you are left behind by automation, surely you'll find yourself with no job.
Group has announced that it is offering a voluntary buyout program for employees considering early retirement as the bank accelerates its transformation strategy. The employee buyout program, which was approved by the board of directors today, is expected to save an estimated 2 billion shillings per annum and should recover buyout costs within a period of 18 months. The program is expected to align the competing needs of adapting to a banking industry whose outlook has been deemed by legislative and regulatory reforms and fast-evolving technology platforms that are now attracting non-traditional players into the financial services sector. The buyout package offers generous severance terms comparable with industry and labor law stipulations, a notice payout of at least 3 months and family access to medical insurance cover for the rest of the year. Other benefits include loan rebates that will see 25% of the outstanding staff loans balances paid off and the remainder to continue at staff rate for 6 months. The International Monetary Fund is projecting a rebound in growth in 2017 through a 2018, citing a realignment in world economies following a near return to normal on commodity prices coupled with fiscal adjustments. According to Maurice Obstfeld, the economic counselor of the IMF, global growth is gaining momentum and countries must stay firm on the path to reform.
First priority is to maintain the growth momentum. Using which tools? Well, the traditional fiscal, monetary, structural reform tools that we put together as that three-pronged approach, which has to be tailored to each country's specificity. Second, and really importantly, we need to reinvigorate productivity, especially by boosting innovation and trade.
Things are really looking up at the moment. We've seen a string of good economic news since the middle of 2016, and we definitely see some momentum. We expected growth to rise in 2016, but we're raising our forecast even beyond what it was a couple of months ago to 3.5%. This year, 3.6% next year.
All countries, of course, should guard against what I have called the self-inflicted wounds, such as restrictions, subsidies, and other trade distortions that reduce competition and economic openness.
In advanced economies and commodity exporters, the medium-term outlook remains subdued because potential growth remains low. In addition, there are some risks out there. An obvious one is the risk of protectionism and retaliatory responses to that. But there are other risks. A very strong appreciation of the dollar could lead to financial tightening, which would have adverse effects on emerging markets.
Catholic-owned Caritas Microfinance Bank becomes the 12th microfinance to launch operations in Kenya today following the grant of a license by the Central Bank of Kenya. The licensing follows a year-long freeze on licensing of new financial institutions. Caritas MFB is owned by the Catholic Archdiocese of Nairobi and comes into a tough sector, with a number of banks still facing headwinds following major reorganization in the financial